Hello, everyone. Welcome to the Junior Developer podcast. Today we have Manish with us. A lot of you folks might know him either from his work in the startup ecosystem or from his work in the security ecosystem or maybe from his TEDx talk, right? So, that being said, Manish, would you still like to introduce yourself, like who you are, what you do?
So that's a very complex question at this moment of time, but I would describe myself as fintech enthusiast who loves technology and finance. Yeah.
That's pretty much perfect way to put it. Sure. So as you know that today the theme is cryptocurrency. We're gonna talk a bit about blockchain as well. So I
Mhm.
want to start by asking you how would you explain what exactly blockchain is to a 5 years old.
So blockchain is a lot more complex than if I have to explain it the right way, but a good analogy is a vending machine, right? So you might have come across a vending machine in a station or at your workplace. So think it of as a computer which works in a systematic way. For example, you put your coin in the machine based on the product you want to get, and everything happens automatically, right? If you want, let's say, a chips packet which has a cost of rupees 10, then you put down 10 rupees coin and you get a chips packet, right? So this is basically what I just explained is a smart contract on which Ethereum is built on.
Mm-hmm.
And to give you a more intuitive definition of blockchain, think it of as let's say we don't know each other. I have some amount of money and you need some amount of money and I want to lend it to you. So right now the system is that I have to deposit my amount in the bank, and you go to the bank and you take out the loan, and the interest rate difference is how bank makes money. But in a blockchain ecosystem, we don't need this bank, right? I can lend directly to you, but there is a question: how do I trust you, right? Why should I trust you? Then the question arises of miners, and that's how this blockchain, which is called distributed database,
Mm-hmm.
decentralized. So it's
Mm-hmm.
basically, let's say I'm lending my money directly to you, but there are thousands of people watching it, right? And these people are the proofs, we call
Yep.
it miners, and we incentivize them with small portion of whatever money I'm lending to you. So basically, think blockchain as a machine which works in a certain way, depends on the use case. It could be transfer of value, it could be cryptokitties, it could be a smart contract like Ethereum, and so on. But the basic concept remains the same. It's a
Mm-hmm.
decentralized open database, and think it of as a computer. Yeah.
All right. And as someone who's starting with his investment journey, why should I or any millennial should care about cryptocurrency as an investment? Like that being said, like we already know that stocks and all are already legalized, right? So why should I not go ahead and
Yeah.
play around with stocks instead?
So as you mentioned, it's called cryptocurrency, not crypto asset, right? When it started as a currency to send money across the people, as we discussed earlier. So we have done tremendous discoveries and experiment with the computer science, and we can send basically anything from any computer to any computer. But you
Mm-hmm.
can't send money, right? You won't be able to send money before cryptocurrency happened, because when you send an image, you have the copy of image on your laptop or desktop, right? So when you send an email, you have the copy of the original email on your account. But with money, when you send money from one account to another, you shouldn't have the original copy of money, right? Because that means you're doing the forge, right? You're still owning the money and you're
Yep.
trying to send the money through the, let's say, by email or anything. So this problem is called double spending problem, and that was being solved by this first cryptocurrency, which was called Bitcoin. So cryptocurrency wasn't started as an asset, but the good or the bad part with Bitcoin was the author Satoshi. He decided that okay, there could be only 21 million Bitcoin in the world. so that made it scare, just like gold and diamond, right? And
Mm-hmm.
anything that is not in enough amount will go up in value. So
Yep.
that's what happening with Bitcoin, but it was not designed as an asset. So basically, if people are getting excited because of price and jumping in with the Bitcoin thing, which will increase the demand and the price will go up. And now, because hardly people use it as a currency, so one of the reasons why it's the price is going up,
Mm-hmm.
and mostly because of higher price, more people are getting into it, which increases the demand, and the price will continue to go up as long as people are interested in. So maybe you can just own a piece of tech because upside is very high. It won't go to zero anytime soon.
Yep.
So yeah, I mean diversify.
And excluding, supply demand, is there any other factors which come into play while determining price of any such cryptocurrencies?
No, exactly. It's the game theory, right? Supply and demand is zero sum game. So
Mm-hmm.
you can't. So one Bitcoin can have only one owner at one point of time. So yeah,
That's what I meant.
that's
Yeah.
how stock market works, and even this blockchain based currency works. Yeah.
All right. And recently, Dogecoin became really famous. So what is the story behind it? Like, if you can brief us.
So Dogecoin was basically invented as a meme. So these engineers of IBM, I don't know the name. He came across Bitcoin. He got excited with the technology, and he decided to start his own coin. And because Doge was a famous meme back then, he started this coin and named it Dogecoin. But recently, it got popularized by because of Elon Musk, right? And if you remember, most of his tweets was in not in the serious sense. He was just fooling
Yeah.
around, and suddenly he didn't invested 1.5 billion in Dogecoin. He invested in Bitcoin, right?
Bitcoins. Yeah.
So he's sane enough. But Dogecoin is basically a meme coin. So I don't own Dogecoin, and I don't recommend Dogecoin.
All
So
right.
more of like take meme, cryptocurrency meme, if you can name it. Yeah.
Sure. Which whose value is pretty high as well, right?
Yeah, so anything which in which people are interested and it's less in demand, the value will increase as long as people are interested.
Yep.
Yeah.
And what are the applications of decentralized this decentralized system? What all application could it have, excluding cryptocurrency?
There's so many things happening right now. So crypto space, apart from currency, is developing. It's still in its very early stage. For
Mm-hmm.
example, you can find DeFi, which is basically decentralized finance, where you can deposit your Ethereum and lend it to someone else's and earn interest rate. So there's a separate industry called yield farming, where they earn interest by depositing your Ethereum. And there are new ways of lending money, borrowing money. Then we have this new file system which is called IPFS, interplanetary file system, where
Mm-hmm.
you can have web domain on blockchain, for example.
Oh,
And this new web is called Web3, and the application that are being developed on this new Web3 is called Decentralized app. And you can build basically anything where you need a trust of people. For example, if you want to start Uber, and Uber made a lot of money for its earlier shareholders and founders, but with blockchain, anyone can be a equity holder from day one, right? Because of the mining and the cryptocurrency and the
yep.
token, uh, because of all these things. So if I want to start a Manish coin, and if you're interested in it, you can own Manish coin from day one by mining it or by helping this ecosystem, right? So there's so many things happening, and I'm looking forward to Web3 and all this decentralized app in particular. Yeah.
Interesting. But where do you see, like, what is the future of cryptocurrency then? How do you see it being evolved?
So if I would have known, I would have started something on it, right? So I'm not very clear on that, but this technology is still is in its early stage. People complained about like slow transfer fee and all this. So remember, like 10 years, how phone used to be, like QWERTY keypads and all those things. So things will take time and it will evolve over the period. All this slow transfer fee and all those issues will go away as the environment matures in the future.
Sure.
Yeah.
Now, let's talk a bit about, the elephant in the room. What's your take on India planning to ban cryptocurrencies?
So I'm not very political, and I'm taking this as a neutral thing because when it was it was banned earlier in 2018, I guess.
Mm-hmm.
So there was not a lot of changes I have made with my portfolio, but I'm a law abiding citizen, so whatever government makes the decision, I'll continue with that. But I think it's a technology. You can regulate it. Why do you want to ban it, right? You can charge whatever 30% tax, 18% tax,
Mm-hmm.
whatever tax you want,
Mm-hmm.
and yeah, regulate it. Why I don't know why Indian government wants to ban it, but yeah, I mean Australia has a proper regulation around it. Canada recognize Bitcoin and other cryptocurrency. US,
Mm-hmm.
uh, I mean companies invest their portfolio in Bitcoin, like Tesla and
Yeah.
MicroStrategy. They're spending 1.5 billion dollar.
A
So
lot of folks also get
personally, I think
savvy via
yeah.
Bitcoin, right?
Yeah, yeah. So that's the point, right? If all these technology people who are well aware, who are way more smarter than me, and all these political people, if they are investing in that, then maybe government of India should give it a thought and reconsider the ban. Yeah.
And they're also planning to, launch their own currency, which will be regulated by RBI and also, like, what's your take on that?
So this is where I was really confused because you want to use blockchain, but you don't want to use cryptocurrency. But this can't be exist separately, right? Because
Yeah, exactly.
blockchain exists because miners get incentivized by token or cryptocurrency, right? If someone is validating your transaction, that miner is getting paid in Bitcoin,
Mm-hmm.
and that doesn't make sense. You want to use blockchain, but you want to like ban tokens or cryptocurrency. So what will be the incentive for anyone who is mining the blockchain that or who is validating that blockchain, right? So I don't know how it's gonna happen, but I think there are way smarter people in the government, so they'll figure it
Let's
out.
see. I mean, it will be an eye opener for the whole industry, right? All we can do is wait for the bill. That's it. And
Yeah, yeah,
yeah,
yeah.
what suggestion would you give to someone who own a good chunk of, who have good chunk of money invested in Bitcoin right now, who is in India, let's say? What suggestion would you give to them?
First of all, own the private key, like own your wallet, because we talk about decentralization in terms of blockchain, but all this user ID password thing, basically you're trusting the platform, be it with BuddyX or UnoCoin or CoinDCX. You're trusting the CoinDCX with that username and password. With private key, you own the wallet. Whatever happens to the platform, you don't care. You own the wallet on the blockchain. So first of all, if you have large chunk of money invested in Bitcoin or Ethereum or anything, any other cryptocurrency, move it to a wallet where you own private key. So that makes you like sole owner,
Mm-hmm.
not CoinDCX or Wajirex or UnoCoin, the owner of your wallet. So first thing first, move to a private key wallet, then wait for the bill. I think if you are not very risk averse, like sell, cash it out, and in the history of Bitcoin, nobody has lost money if you had hold it for more than 3 years, right? So
That's correct.
I'm assuming you're already in profit, right? So if you are very risk averse, like sell, cash out your profit, and worst case, last scenario would be you don't want to cash in, then transfer your Bitcoin to someone who is living in the foreign, maybe your
Mm-hmm.
friend's family, and yeah,
Get the money from
enjoy
them. Yeah.
and yeah, yeah, yeah.
But what about, like, do you think, like, right now, like, whatever is happening in India, right, based on this bill and all, do you think it's good time
Mhm.
to start investing, or do you think one should wait for the, bill to pass on, then figure out?
I mean, because cryptocurrency, particularly Bitcoin, is very volatile. In last 10 days, I think it's up by 10% or 5%. I don't know. So maybe you can take advantage of the volatility, and because all these new companies are getting interested to put Bitcoin on their balance sheet. So
Mm-hmm.
maybe, and I'm obviously biased because I own some Bitcoin. So maybe you can take the advantage of price action before the bill is presented. Maybe, I don't know. I don't give investment advice. Yeah,
All
that's
right.
about it. I mean, you can own a piece of technology if you are tech enthusiast, or just spend. You can buy with as little as 1,000 rupees, 500 rupees. So
Cool, man. I think that's all we have for today. Thanks a lot, Manish. Thanks for your time. I'm sure a lot of folks got to learn a lot of stuff.